Yeah, folks, we are Sunday, 26th of October, the day before earnings for Elbm. I have new information to be more precise of what's going on. Please take note and be very focused. Okay, Elbm actually have around 90 to 100 million shares out. Okay, but they are, they are fully funded to build the refinery. They have lowered the debt from 64 million to 24 million, so the books are a lot more cleaner. Cobalt price have been taking more than 40% in the last 3 weeks. And that's very important because if you multiply that by 6,500 tons per year, that gives you a difference roughly of 60 to 80 million annual sales, okay? So, what's going on here? The shorts have been dropping tons of fail to deliver because they can't find shares to short. The CTB, the cost to borrow, is around 700%. That costs them like 2% per day to short shares that they don't even find because there is zero shares available. So they are dropping fail to deliver since the end of September. So they are dropping fail to deliver shares since the end of September because there is no more share to short. What's going on? The directors have a lot of shares. We don't really know how much. We're going to discover with time. What we know is that two big institutions have been buying from the new shares more than 9 million shares each. So it's 18 million, 0.5 million shares in the end of two institutions that they are not in the market. And the price have been artificially manipulated to keep it down because they are hoping that the director tomorrow night will say in the conference call, we are doing a reverse split of one new share for 3.5 old shares. In my humble opinion, that will not happen. Why? Because the director know that short are very heavy here. And on the other hand, they need the stock to be liquid. Because if a lot of shares are stuck out of the market in the end of insiders or institution, that means that the stock will not be very liquid. So if they do a reverse split of 3.5 for 1, the float will drop to 25 to 30 million. And again, the stock will be difficult to trade. An institution will have difficulties to buy a chunk. By keeping the float around 100 million, even with institution having 20 million, then insiders, this and that, you keep a good amount for the float to have a liquid shares, an institution who can basically come in. So what's going to happen next, in my humble opinion? I think, that's my opinion, that they are going to cancel the reverse split because we are far away of $1. We are at 145. Worst case scenario, they will try to touch 128, 129, and from there they're going to cover big. And they are going to cancel the reverse split, or maybe, I don't know, two shares for one new share, something like that, or nothing. In that case, immediately the fear of dilution that will not happen because they don't need money, and the fear of a reverse split will be out of the way, you will see a big spike in price and people will be confident to buy. So we're going to have a lot of answer tomorrow night in the conference call. naturally the upside risk is a lot higher than the downside risk because the stock is de-risked now with all the fundings. So really, I mean, short term, nobody really know the tricks that market makers are going to use to cover and to deliver all the FTD they have. But what we know when we see, because like I was writing on stock tweets and Twitter, when I'm lost, I'm always pulling out a weekly chart, okay? And weekly chart is a lot more clear than a daily. When you see the weekly chart, the next part of the story is pretty clear. We're going to fight hard to cross the $3 area because the stock was under $3 for a long time. That means we need to absorb a lot of bag holder or people who want to go out and this and that. So they are going to shake the tree from here to $3, you know, for some time. I evaluate that until end of the year. But from there, if we cross the $3 area, 2.8, 2.9, something there, if we cross it, the way to go to $6 is very quick, because in that case the resistance are very light. So the big fight now is to cross the $3 area. That will, you know, be very hard because the short are so heavy here. They have a lot of FTD, a lot of naked short. The CTB is at 700%, so it's an explosive situation. But if we zoom out and we look at 2026 with the refinery approaching, going into production, what I see is that when we cross the $3, we go very quickly at 6, and when we cross 6, we go very quickly at 10. My target is to reach $10 end of 2026. So that's mean from here it's a kind of 5 or 6 bagger. And for summer 2026, I expect us to be in the $5 to $6 area. So that's a 3 bagger. But, you know, whatever you look at this story, the entry price right now is very super low. The downside risk is very, very limited, and it's not easy to find in the market mines and, you know, production of rare metals or, you know, cobalt and all that are near production with de-risk profile. It's very difficult to find, and to find this at $1, it's amazing. I mean, look at WWR, they are in another metals, same market cap, same float, but they are far away of being in production, you know. And there is a lot of other example, ABAT, AREC, they have 3, 4, 5 times more market cap in the same area. So at $10 end of next year, that will mean a market cap of $1 billion. And that's absolutely not crazy, because at today cobalt price, that will mean 3 times sales. If cobalt go to 80,000, like all-time high, that will mean that they are going to basically have 2 times sales at $10 per share. So, in my humble opinion, they absolutely don't need to do a reverse split. They just need to release news that will force market maker who are short and have fade FTD to cover, and the price will take care of himself and bring the stock around 2.8, 2.93 very quickly, very quickly. After that, it's a story about execution. If they do what they say in the good time frame, we can see $6 in the summer of 2026 and $10 at the end of 2026. That's my view of the situation. I'm not financial advice. I'm not in the company. But I'm looking at the chart, and I know how market maker operate. They always take advantage of penny stock, who trying to, basically, that's what we see mid-October with this spike at $8.05. We see that there is an interest, that we see that there was volume. We see that there is a potential. You don't have this kind of run on volume, for nothing. So that's mean the money's there. Now it's a story about execution and trap the short to force them, to let them survive, and forbid them to push the stock under $1 because they want to see a reverse split. They don't, the director don't need to give that gift to the market maker. He need to cancel it and release news that will attract new buyers. And when volume come, market maker will be covering big time, and that will be an amazing spike. And from there, I think the stock price is going to, stabilize around $3 before seeing 6 mid next year and 10 end of next year. Take care, trade safely.